Everyone, Jesse Webb, Traders Pro. Welcome. Let's take a quick look here. Market conditions are mildly bearish. Moved back just a little bit on S&P 500 on Friday. We'll take a little bit closer look. Essentially, what that means is traders should consider trading with a neutral or bearish bias, raising stop levels on winners and selling losers. The rank of this market currently is 12.99, which is this number right here, and we're rolling over, kind of slowing. This trend has been, it's been slowing for the last 2 or 3 months. This is a very slow moving indicator. As we move down the page, these get a little bit faster indicators here, and markets still have a little bit of work to do right here on S&P 500. Let's look at the buy-sell ratio first. We've been talking about this now since clear back here, and it still has a little bit of a bearish tone to it, a little bit of bearish bias. Bears are in control here, but we are seeing these gradually work themselves back together, which is what we want to see, is the red and the green lines starting to work back together and ultimately get the green line back up above the red line. That'll give us a more of a bullish market condition when we have a buy-sell ratio down here. We want to see a buy-sell ratio of 1 or higher. For healthy market conditions. This is a 0.23, which just means this. We've just got more sells than buys. If I mouse over that number, 2,700 versus 600. So there's just overhead pressure for the markets to really rally right here in terms of the number of stocks that are in downtrends, and that's kind of the state that we're in right here. S&P 500, this range that we've been talking about now, we've got this uptrend here, the swing high and the swing low, and the retracement back to this counter trend zone, this 61850 buy zone. Now we're back up above this level. We've rallied up inside of this range, and let's see if this range starts to hold. What we should start to see now is we should start to see support right here. We've seen 2 days of it now. Yes, they were down days pulling back, but we'd had one solid up day, another solid up day, a third solid up day. Really significant rally off of a pretty major market low. At least a 2 or 3 month low right here on S&P 500. So these are areas to watch right now for them to hold. If we can get an up day or two and then even test this upper range, we could start to see this momentum range bump back up into this buy zone, and we'll just get a little bit more solid confirmation. We're starting to see that now, but we could just as easily slide back down through that. This is a pretty significant area now that we want to watch to see if we do start to get a bounces or higher lows off of these ranges. That'll be significant for the market right here. Let's look at sectors and see how that's looking. The overall group, still haven't really had any bump up into the uptrend range, that buy zone, and some volatility on Friday, pulling some of those. Still seeing that hold to sell range. So that's kind of this really tells the story of the market right here. We're working towards an upside, but we still have kind of stuck in that middle hold range with some downside pressure, and we are seeing the decent move in commodities here. At least oil and gold and silver. So we're seeing oil have this move. Part of that was geopolitical issues in the Middle East. Back here, we'd have the sell-off and then the bounce, but it's starting to move back up again. Now oil is back up in this upper buy zone and the momentum zone, and we'll see if we get some follow through on oil. And then also gold. Gold is showing some strength right here. GLD is the ETF symbol, and off of that 6-month chart. The 1-year time frame where we had this large uptrend retrace, the swing low, the swing high, we've retraced all the way back into that buy zone, that 50618 location, and getting a little bit harder to see on that hold signal, but you're seeing that chart on GLD bounce significantly and starting to gain some momentum right here on gold, something to certainly consider at these levels. Let's take a look at some muscle stocks in this group. EH was the first one on the list. I'm going to move this back to that 6-month time frame. It had a big gap higher, like a massive gap higher, and then traded lower all the way from here. Ended up closing here, still up 18% on the day. But these, when you get a big gap higher and a retracement and things are overbought right here in that extreme range, you could wait a few days and kind of see how it settles in for a stock that has kind of some wild volatility. Let me just refresh this. We'll move over to this perspective here. WRFD, I like this one. I'm going to move back to signals. This is the first buy signal after a sell signal, and it's a most recent buy signal after a hold. So you're getting momentum. You're also in a sector which is starting to move. A leading sector is is oil, at least has been. It's been retracing, but that price of oil is still relatively high, and you're seeing some of these companies that they had a retracement, but now they're starting to continue that overall uptrend. Keep an eye on that one. IMVT, this is a biotech, biomedical that had a big move higher and now is retracing. This is an example of having a big gap higher in a day or two, and then just letting it kind of calm down a little bit and see what it ends up doing. See if it finds some support. It's retracing, finding some support, and now working its way back up again. Again, biotech, anything, medical are certainly more volatile, and you want to be able to account for that amount of volatility in the position size. RELY, this is a nice looking pattern, very nice looking momentum pattern. When you have this upper zone, and you have a retest of that area, you get a confirmation move, a pullback, and now you're getting another move back up again, a solid bar closing higher than the prior bar, plus you're back up in the buy zone. RELY is a nice looking stock in that top 4 or 5 PR. We're seeing, again, these are a lot of similar pattern on a lot of new buys today. Oil and energy, I'd keep an eye on those. If you're looking for oil and energy and you can't necessarily decide on a stock, you can also look at the ETFs. Over here on the muscle ETFs, the spring-loaded group, there are a few that are in here. In fact, there's quite a few. They're still hold. They haven't bumped right up, but you can buy the entire oil equipment sector service by just buying one ETF. It's an idea to be able to take advantage of that move in those stocks without necessarily having to pick the exact one by utilizing an ETF. And there's a lot of ETFs to choose from, and a lot of them have similar patterns right here. You can keep an eye on some of those. That'll do it for today's update. Everyone have a fantastic day. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a great day today.